Hey everybody, welcome back to Chapter Three's example. And in this example, we're actually going to go back all the way to the problem that we did in Chapter 2. We're going to finish up the accounting cycle with it. And in this video, we're going to do the financial statements of it. So hopefully you still have that information, and also hopefully you've watched the previous 5 videos, because that's going to get you caught up to where we are right now. The previous 5 videos talked about the adjustments and the adjusted trial balance, so that's what you're seeing right here on your page. So hopefully they're the same that you're keeping up with. So let's jump into it. The first financial statement that we're going to be doing is the income statement. And the income statement is made up of revenues and expenses. So first, let's put our name at the top, the business name. So we're Bravo Company, and this is December 31st of 2000, whatever. But let's get into the revenues. Now we have 2 types of revenues. If you look at your adjusted trial balance, it gives you the balances for them. So we're going to start with consulting revenue. In consulting revenue, we have $174,000. And then we also have interest revenue, and in that we have $600. We're going to write both of those down. That's both of the revenues that we have. So if we add that up, that's going to give us a total revenue of $174,600. Now we can move on to the expenses. We have 4 different expenses. First, we have salaries expense at $26,000. Next, we have rent expense for $18,000. Then we have supplies expense for $1,550. And finally, we have miscellaneous expense of $44,000. There's the 4 expenses that we have. We can add those up. That's going to give us a total expense of $89,550. And now that we have total revenue and total expenses, we can subtract the 2 and find our net income to be $85,050. Again, double line number, because that's all we're going to do with this number on this form, this financial statement. So that's our net income. Now we're going to move on to our statement of retained earnings. So in that, again, our name's still at the top, still 2000, whatever. We're going to begin with the beginning retained earnings, what we began the year with in retained earnings. And if we look at our T table of retained earnings, it hasn't been touched, but we still have a beginning balance. So our beginning balance is $10,400. And to that, we're going to add our net income. The net income we just found on our income statement, which was $85,050. And that's going to give us an intermediate number of $95,450. And then from that, we're going to subtract any dividends that we had. Now, we did have dividends in this example. It was $5,000, so we're going to take that away. And that's going to give me an ending retained earnings balance of $90,450. Again, it's double line because we're finished with that number on this statement. So that's our statement of our statement of retained earnings. So let's go into our balance sheet, which is the next one. Again, our name is at the top, December 31st of 20, whatever. And in the balance sheet, it's broken down to assets, liabilities, and equity. So that's what we're going to itemize on this one. So we're going to start with cash. Cash is our first asset. We always start with that one. And we're going to put it at $28,500. Then we're going to have accounts receivables at $24,000. Next is interest receivables, and that's at $600. Supplies, that's going to be $350. Prepaid rent of $6,000. And finally, we have land of $100,000. That's all of our assets, so we can add those up. That's going to give us a total asset of $159,450. All right, so now we can go into our liabilities. Now we have 3 liabilities. So the first one is going to be accounts payable of $14,000. Unearned revenue, what we still owe in service, of $9,000. And then we have salaries payable, what we still owe in salaries, of $6,000. We can add all those liabilities up. That's going to give us a total liability of $29,000. And finally, we have equity. And remember, equity for us is just going to be 2 parts right now. We're going to have common stock, and our common stock balance is going to be $40,000. And then we have our ending retained earnings. We just found our ending retained earnings to be $90,450. If we add those up, that's going to give us a total of $130,450. And if we add that to our total liabilities, that's going to give us a total liabilities and equity of $159,450. The total liability and equity is the same as the total assets, so we know we're on the right path. Remember, those have to be the same. All right, finally, we have our statement of cash flow. And in order to do the statement of cash flow, we actually have a better mechanism piece that allows us to do the statement of cash flow a little bit easier. The statement of cash flow tells us how cash comes in and cash goes out. That is also the same thing our cash T table does. It tells us what goes in and what goes out and where. So that's pretty much the key to the statement of cash flow. If it's on the cash T table, then it's going to be on the statement of cash flow. Now, really, in order to do this, we need to go all the way back to what we did in chapter 1, where we went FA, IA, and OA. We just kind of identified things as FA, IA, or OA. And so I'm just going to do that real quickly. 1.1 was an FA because it was for common stock. 4.15 was paying off, someone was paying off their accounts receivable, a customer. 6.2 was a customer was prepaying us. 2.28, that was for salaries. And then we have 4.1, that was for rent. We prepaid rent. 7.1, we had supplies. 7.20 was for land. That was IA because it is land. 30,000 was for miscellaneous expenses that we were paying off an AP, an accounts payable. And then 12.1 was for dividends. So that keeps up with our FAs, IAs, and OAs and all that good stuff. So this is, now that I have the OA, IA, and FA, this is kind of how I do it. This makes it a little bit easier for me because I can just kind of go in the order in which I know they're going to happen. I always know that my positive numbers are going to go first. So I'm going to start with the debit side of the T table. So specifically, I'm going to look at 1.1. 1.1 is going to be FA, so I know it's going to fall under financing activities, and that was for common stock. So I'm going to put cash received from common stock of 30,000. All right. So then the next one is going to be 4.15. That was when a customer paid off their accounts receivables for the service that I've already done. So that is going to be cash received from customers. Again, that's the first one that we usually do for operating activity. Now, before I put that number in there, most of my business comes from customers, so I'm going to check the other ones just to make sure that any other debit is not dealing with customers. And the other debit is going to be 6.2, and that is also for customers paying us. They prepaid us up front, so it was an unearned revenue for us, but they did give us the cash up front. So both of these are actually coming from customers. So I'm going to add those together, and it's going to be 159. So 159,000 from customers. That's all of my positive numbers. So now I go over to the credit side, which are all of my negative numbers, and I just go down the list. So the first one is the 20,000 from 228. That was an OA, and that was specifically from salaries. So I'll say cash payment from salary or for salaries. 20,000 negative. Then I have the 24,000. That was for rent. So I'll say cash payments for rent. Negative 24,000. The next one was the 1,500. That was for supplies. So I'll say cash payment for supplies of negative 1,500. The next one was an IA. That was for land. That was for the 100,000. So under investing activities, I will put cash payments for land of negative 100,000. Then I will go to the next one, which is the 30,000 on 8.15. That was for miscellaneous expenses. That was paying off the AP, but was specific to miscellaneous expenses. So I'll put cash payment for miscellaneous expenses of negative 30,000. And finally, I have the 5,000 on 12.1. That was for dividends. So that is going to be cash payment for dividends of negative 5,000. So now that I have that, all of my transactions I put into the T table is now on my statement of cash flow. So now I can add up all the activities. And so the net cash flow from operating activities is going to give me 83,500. From investing activities, it's going to give me negative 100,000. And from financing activities, it is going to give me 25,000. Now, if I add up those three net cash flows for each activity, that's going to give me an increase in cash of 8,500. That is what my cash did this year alone. It went up by 8,500. Now, to that, I'm going to add my beginning cash balance, which again also comes from my cash T table. So that is the beginning 20,000. So I'm going to put 20,000 there. And if I add those two together, that's going to give me my ending cash balance, which again can be found on my statement or my cash T table. So all the numbers on the cash T table will be used in the statement of cash flow. And it's a great way to kind of check yourself to make sure you're doing it right. So that is how you do the financial statements for this problem. Hopefully it made sense to you. Hopefully you enjoyed it. Y'all take care.